Welcome to our deep dive today. It's December 19th, 2024, and the financial markets are, well, they're buzzing, after the Federal Reserve's latest announcement.
Yeah, a lot to unpack there.
It's a lot to take in, right?
Yeah, absolutely.
It's enough to make your head spin. But lucky for you, we've got this market deep dive report. It's hot off the presses, so to speak. It's going to help us figure all this out.
It is a fascinating report. It really is a great snapshot of
Right.
how the market's reacting to all this news.
All right, so let's get into it. The big news, the big headline is the Fed lowered interest rates. Now, at first glance, that sounds pretty good, right?
Yeah.
But of course, there's a twist. They also hinted that they might not cut rates as much as everyone was expecting.
Yeah, it's like they're tapping the brakes, but keeping their foot on the gas.
Interesting analogy.
It's a hawkish cut, is what they're calling it. And it's definitely created uncertainty. I mean, a lot of uncertainty in the markets.
For those who aren't familiar with Fed speak, what exactly does that mean, this hawkish cut?
Well, it means they're trying to, they want to stimulate the economy, but they're also trying to keep inflation under control.
Gotcha. So how does all this uncertainty affect, the average person?
Well, it trickles down, really. Your investments, loans, even those big purchases you might be thinking about, like a house or a car.
Yeah, makes sense. All right, let's look at how the different parts of the market reacted to the news. The Dow Jones is up, the S&P 500 is slightly up, but the NASDAQ actually dipped. So it's a real mixed bag of reactions.
Seems like some investors, they're looking for safety, like the more established companies, the ones in the Dow and the S&P 500. But then you have the NASDAQ, which is mostly tech companies. They seem a little nervous about how tech's going to do in an environment with higher rates.
Speaking of nerves, Nike's stock actually took a hit, even before their earnings report came out.
Oh, wow.
This is their first report under the new CEO.
Yeah.
So the pressure is definitely on it.
Yeah, earnings reports are always a big deal. But during times like these, when things are a bit uncertain, they can really make or break a company's stock price. Investors are looking for any sign of weakness. And then you have Accenture. They had a fantastic quarter. Their success is really tied to, helping companies navigate this whole digital world, especially in areas like AI.
AI, yeah. It's interesting. AI seems to be like a safe haven for investors, especially now with all this volatility in the market.
Yeah, I think investors, they're looking for those sectors
Yep.
that are poised for growth, regardless of what's happening in the broader economy. And AI definitely has that potential. I mean, think about it. Companies that are developing like AI-powered solutions for automation, for efficiency, that gives them a real competitive edge. And it offers, the promise of growth, even when the market's going up and down.
So we've talked about stocks, but let's not forget about bonds. The Market Deep Dive report mentions that bond yields are up. What does that mean exactly?
Well, simply put, it means that borrowing is getting more expensive. And that has implications for a lot of things. Government projects,
Yeah.
corporate expansion, and yes, even those mortgages we were talking about earlier.
Right.
It's not necessarily bad news for everyone, though. I mean,
Yeah.
fixed income investors, they actually benefit from those higher returns.
So it's really a ripple effect across the board.
Yeah.
It's not just about what you invest in, but also how much it costs to borrow money.
Speaking of things that affect the economy, oil prices seem to be stabilizing at least. That's a little bit of good news, right?
Yeah, it's definitely welcome, although it doesn't really erase those concerns about long-term demand.
Right.
And then, of course, you have gold, which always seems to hold steady,
Yeah.
even when things get a bit shaky.
It's like that old reliable friend you can always count on. But let's zoom out for a second and think about the global picture. The Fed's decision, it's not just impacting the U.S. We live in a global economy now. Everything's interconnected. So what happens in one market, it can definitely ripple out and affect other parts of the world. Europe and Asia, they're feeling the effects of the Fed's move too. And their central banks, well, they're responding with their own strategies.
It's like a big game of financial chess, with everyone trying to anticipate the next move. So, besides the Fed's decision, what other factors should we be paying attention to, in the coming weeks?
Well, Market Deep Dive mentions a few things. First, economic data, things like inflation, employment numbers, GDP growth. These are all key indicators. That'll give us a better sense of, how strong the economy really is. The Fed's going to be watching this data very closely, too, to see if their hawkish cut is actually working.
And then there are corporate earnings. Nike's report is just the start. We're going to see a whole wave of companies reporting soon, and their projections for 2025. Those will be really telling.
Yeah, are they optimistic? Or are they, battening down the hatches?
Their outlook's going to give us some valuable insight. into how businesses are feeling about the economy. And that can definitely influence where the market goes.
Absolutely. And then, of course, you always have those geopolitical wild cards. Trade wars, political instability, unexpected conflicts. Those are the things you can never really predict. But they can really shake things up.
It's like trying to predict the weather.
Yeah.
So many variables.
Exactly. Geopolitical events, they're inherently difficult to forecast. But staying informed about what's happening globally, assessing the potential risks, that's crucial for navigating these times.
All right. And speaking of things that are hard to predict, let's talk about AI again. It feels like every day there's some new breakthrough, and investors are just pouring money into the sector.
Yeah, the excitement around AI is definitely palpable. But it's important to remember that not all AI investments are created equal.
Right.
I mean, some companies, they're driving real innovation, but others, they're just riding the hype wave.
So it's not just about blindly investing in anything with AI in the name. It's about doing your research, understanding the technology, and choosing companies that have a solid track record and a clear strategy, kind of like what we're doing here with this deep dive. We're taking the time to really understand what's going on.
Absolutely. We're giving you the knowledge, the insights you need to make informed decisions, whether you're investing in the market, buying a house, or just trying to make sense of the world around you.
It's a lot to process, really. I mean, with all this information coming at us, it's easy to feel overwhelmed.
Yeah, that's why it's important to kind of step back and focus on the big picture. You don't want to get lost in the weeds.
You're saying don't panic over every headline.
Exactly. And you don't have to. Try to time the market perfectly.
Yeah.
It's more about staying informed, understanding the risks and the opportunities, and making decisions. That makes sense for you. That align with your goals.
And knowing that things can change.
Oh, absolutely. This deep dive is just a snapshot. The market is constantly evolving, right? Yeah.
So be ready to adjust as things change. Based on new data, new information, even your own risk tolerance. That can change too.
So we've given you a lot to think about today.
We have.
But hopefully, this deep dive is giving you a good foundation for understanding, all these factors that are shaping the market.
Yeah, and we encourage you to keep learning, keep exploring, maybe do your own deep dives into specific companies or sectors that you're interested in.
Exactly. And never be afraid to ask questions.
The
more you know, the better prepared you'll be.
For sure.
All right, so to recap, the Fed threw us a curveball. The market's still trying to figure things out. And there's a lot that could happen in the coming weeks.
Yeah, it's going to be interesting to watch.
That's for sure. Well, that's all the time we have for today. Thanks for joining us on this deep dive.
Thanks, everyone.
Until next time, happy investing.